It is Saturday morning, I've had my coffee, I am fired up and ready to go. I've just looked at the last week and some of the gains we have made, and I'm looking at towards next week going, will this run continue? Well, we'll soon find out. What is the crack, everyone? Welcome back to Buy Hold Sell. Hope of course you're all well. It is Saturday, feeling good, bit gloomy, but I've got a day with the kids all day. My wife is getting a well-deserved break, so I'm looking forward to spending the whole day with my kids. So getting up early, get this video done, baby, get it banked. So first off, great week for myself. Featured in quite a large local sort of media outlet, Belfast Live. Belfast Man shares top tips for saving money on heating. They picked up my video, so great exposure for myself in the local community. Got actually a load of subs from it, so delighted with that. You can go in and watch the video. I'll share the link to the oil video, and you can go on and read the article if you wish. So I was delighted with that, but more importantly, I was delighted with the gains this week. So we've been covering on the channel, earning seasons to me looked like it was going to be a bad period for us. It has, in many respects, been a bad period. We have technically entered a recession. The Bank of England have come out in the UK and says, get ready, this is going to be brutal, something like you've never seen since the 1950s. China looks to be going to war with Taiwan. We're currently in a war with Ukraine and Russia. We have an outbreak of monkeypox. The USA have just declared it as a national emergency, but the stock market wants to go up. So as that goes, and you really cannot time the market. It just makes the point even more relevant that you look at the charts and ignore all this other crap that goes on. So just to kick it off, we'll have a look at the heat map. Friday was a bit of a bloodbath. The job data was a hell of a lot stronger than what most people thought, which shows that the economy is strong, which means that the rate hike can continue by the Fed, or they can be more aggressive, which we've seen the market doesn't like. Rates going up hurt growth companies especially. So that's kind of what happened on Friday. I've got my own thoughts on the labour market, which we'll get into. We can see Tesla massively sunk off. They've just announced 3-to-1 stock split, which I shared in my Discord group. We can see here 3-for-1 last night. It came out, so and we're chatting about that. Perhaps that's why Tesla sunk nearly 7%. Thankfully, I had a stop loss set at $900. Obviously, didn't want to sell, but you know, with this market, everyone knows I'm being very cautious. So I got a good lot of the money out. The week looks a lot stronger. Now, Tesla did finish, unfortunately, down on the week 3%, but it's had such a good one. We can see the majority of the FANG stocks have went up, but it was generally a mixed bag of a week. It wasn't as great as the week prior, but it still is a positive week. So I kind of be drawing this line, sort of saying where we're going, and it's been bumpy. We're getting a good rally here. I sort of said in my video last week, wouldn't be surprised if we could see maybe a run up to the averages here. Looking at the chart, RSI showing a wee bit of decline, but that's because of Friday. It's still a bit of momentum there, and the MACD still looks strong. Still above our averages, so I mean Friday's sell-off in brackets wouldn't worry me too much in terms of going, oh no, it's on the backwards downturn. I did share in my Discord this though, again, just to remind people, so this is where it goes, everyone's happy, then it goes down, and then, oh, we're turning to normal, and then the fear. And I just worry that that could be what we're getting here. You know, if we strip this out, and this is what I always say, you have to sometimes take the charts and just strip it all out. It doesn't look unlike that. If it was to go down, starting to come back a bit, perhaps to get up to about the moving average level, and then it could pull back. The news is terrible, guys. The market is reacting in a really strange way to it all. But the market does predict the future, so perhaps it's baked in a lot of this. It's having a bit of a rally, and then it's going to put it right back down. I'm prepared for that anyway. We'll see. Wrap up with the week then. US equity markets ended Friday's session mixed after a stronger than expected jobs report. As we said, the astounding labour market recovery from the pandemic is complete. The US economy added 528,000 jobs in July, more than double the number economists has expected. The staggering increase in employment completes a milestone for the US economy. Pre-pandemic employment is now fully restored. At the high level, the indicator is jobs are up, economy strong. I get that, but I just take it all with a pinch of salt. That's just my theory. I've covered it in other videos. I'm not going to repeat it too much. Oil prices fell, and I bought my oil, got it delivered this week. And we'll see. It may be dip a bit more. It might go up. I did put in my Discord that I opened up a buy-in at around $89 a barrel. And I said here, probably should wait a bit more for confirmation, but thought I live on the wild side. So it opened up my oil at 88.4. Sorry, there's my price there. And we can see we're sitting at 88.5. So huge gains on the oil so far. But the reason I did it is because we drew this falling wedge. Usually when it gets to the bottom, it might go up. Now it could fall down, it could massively go down. Of course it could, absolutely. Like I said, we didn't get the confirmation on the 4 hours, so the symbol came in and then it went away because it didn't close that candlestick. And again, you'll learn all this in the trading course if you're interested in knowing, but I rolled the dice that Either way, I didn't go heavy leverage. Usually I go heavy leverage. I didn't. I went 2 times leveraged on it. Very reserved. Just to kind of try to see if I can get it early. But if we can get proper confirmation, I will go more leveraged and more large on it on the dream that we're going to go back up, because all you're seeing is the data going that direction. We've hit a nice sort of support level in and around this range. It's at the bottom of the wedge. It's making a decision. To me, there's quite a bit here that's in our favor, but there is no guarantees. And like I said, you should really wait for confirmation. Do I see oil prices above $88 a barrel going into the winter? I absolutely do. So with that, it could become more of a bit of a hold, but we'll see. We're not going to look at all the earnings and stuff. The earnings were good. I've shared them with Discord. I always put the earnings in. We cover the earnings in detail. We talk about different things, Alibaba. And we'll get into Alibaba. Don't worry, we'll get into Alibaba, but I do put in the earnings chart, and you can see here, there was some good earnings this week. And the majority did pretty well. Beyond Meat on Friday really blew expectations, and I have a longer hold in Tattooed Chef. Here's our little asset graph then. Commodities, oil, all pulling back a bit, and it's starting to get a bit more sort of in the middle now, isn't it really? The gold obviously sunk on the back of the job data, and we can see the stocks, everything's starting to grind. The only thing that really hasn't moved too much is Bitcoin. Bitcoin is just sitting kind of flat. It is up, of course, not as bad as what it was. You know, a matter of a sort of 5-6 weeks ago. We have seen a decent enough bounce from the lows of sort of 17.8. We are currently up about 22%. So I mean, in most people's eyes, that's a good run. However, we're sitting just shy of 23,000. And where do I see that going? Well, you know my thoughts on it if you follow the channel. I just see downside. Eventually, wherever it goes, I just see downside. So treading carefully on the Bitcoin. Here's our events calendar. Not going to cover Pacific. The only one I'm really keen on is Disney. Got quite a substantial amount in Disney for a long enough hold. I am leveraged in it, and I probably would like to change that from leverage to the normal stock itself. Love Disney, love what they're about. But fresh inflation reports this week on Wednesday. It'll release its July consumer CPI data. That's going to be a big indication. Has the rate hikes helped? A lot of people think that inflation has went down. So if that's the general feel, perhaps if it shows that it's went up, that could be squeaky bum. We've seen in the FTSE, the UK, that inflation is ripe. Some scary news. Bank of England raises rates by most since 1985, warns of long recession. That's unfortunately the reality that we're at, and I don't really see why any country should escape this. Now, the UK has dealt with Brexit, and I've got my own thoughts on that. I think Brexit has been probably the worst thing that could have happened to the UK. On top of everything, to be fair, we've had COVID, we've had all of this terrible market conditions, war. There's been a lot of things, but the real root to the issue, the main issue why the UK seems to be doing worse than everywhere else, it is down to Brexit. There's no doubt about it. The labour shortages are really having a mass effect. And just on that, there was some guy that commented that really made me chuckle. He said that I was wrong in my theory. He said, well, sure, all the best companies in the world are laying off people. Why would you be laying off if there is a labour shortage? Well, simplest way I can put it is, if you had one job that was a guy going out and just shoveling crap and putting it into a bucket for a living, or you had, on the flip side, another guy who was in New York City in the best skyscraper in the world, luxury office, working for something like Google, which job would you want to pick? Yeah, say no more. So the best companies in the world are never going to have an issue hiring people, and they might be overstaffed in time. It's the lower end, labour is where I'm talking about the shortages. But anyway, so gotta watch out for the inflation data. That could have a massive effect. And the consumer sentiment update. Friday, market watchers can expect an important consumer confidence. The index reading is projected to raise 52.2 from 51.5, recorded late June. Consumer sentiment is tracked by the MSCI. Previously fell to a record low 50 in June, rebounding slightly last month. Rising inflation, declining purchasing power, and deteriorating economic outlook, including the prospect of recession, have caused consumer sentiment to fall. Now, I'll just actually go on the Reuters here. US labour market defies recession fears as jobs growth surge in July. That is the kind of media pump that's going out there. The unemployment rate fell. Ties into my theory just about the whole, a lot of people retiring, there's not enough people coming in to the system to feed the top. It makes sense that the employment rate is going to go down. More jobs being left, more people filling those jobs, increases in employment. To be fair, this is an interesting quote. If the US economy is in a recession, no one seems to have told the employers. And that is true. At the end of the day, we still see a lot of employing going on. So it does make you kind of go, well, hold on here. If people are that worried about it, would they still be hiring? Just depends on the shortages. Again, if the jobs need filled and there's no one doing it and stop making money, there's always going to be jobs that are going to get filled. And you can see a nice little graph here, quite difference. A nice little graph, total employed versus private employment. There's some guy doing the old-fashioned way, help wanted, good lad. But an indication of inflation is the wage growth. Wages are flying. And again, another tip, if you've been in your job a long time, and you think you've got scope, I would be going in and laying down a law and saying, guys, pay me more. Analysts expect Argentina's inflation to reach 90.2% in 2022. The UK is predicted for 15%. The inflation is crazy. My wife was telling me, I used to buy eggs for 80p. Now they're 125. That is incredible. So we're all feeling the pinch. We're all in it together. We've all got to help each other, and I will guide you as best I can. Now let's talk about the juicy stuff, the stocks that we've won on. Some great winners this week. Let's have a look. I suppose the main hitter this week that was a great winner for me was SoFi. So SoFi decided to rip 30%. On that rip, I decided, right, I'm going to put more money in because I just fancied it. SoFi was so undervalued. I love everything about their earnings report that came out. But when the buy symbol came in on the R chart, I wrote it. And thankfully, this bad boy just ripped. It ripped absolutely massively. So I got a lovely set of gains on that. All in the Discord, we chatted about that. On the R chart, if I'm doing a day trade, I look at this and go, well, where's the confirmation coming? Normally, I strip it down to the 30-minute chart to see what's going on. I was looking at it in the pre-market, watching it go up and up. And then I was like, okay, as soon as the opening bell came on, I let it settle. Kind of pulled back, as did as usual, open, sell, let the thing settle for 15, 20 minutes, get my confirmation, and then I ride. And the confirmation came on the R chart, and then I was in. Wasn't too greedy on it, closed out a lot of the position. So I put into this about SoFi, flying, went up 25%. It just kept ripping, 27%, 29%, 30%, wild day. AMD targets, 98, 101, 3, and 9 as price targets. AMD near the target 139. We closed out AMD, and we got ourselves about 8% on that trade. Some good money, as usual, on Tesla this week. One stock that didn't go well was Alibaba. I love Alibaba as a company. I really do. I like the growth. I like what they do, what they offer. And now starting the Amazon dream as well, selling, I can see the potential with it. But this maybe meme sums it up. Alibaba, that's me holding the bag. Stock shot up massively. Baba earnings were very good. It was up about 5-6%. I set an order. I said here, look, it's down 72%. Load of FUD around it. Following SoFi's big win the day before on the back of earnings, I just fancy maybe it to run them. Not expecting 30%, but I expected it to potentially run, looking strong on a 30-minute, and I was in, as everything I just said there. These levels, getting Alibaba for below $100 is never going to be an issue. I bought it at 99.99 just to be funny about it. There you go, I'm in at 99.99. So that was it. It was down 1.8%. It was slightly up and down, and then I just said, right, you know what it is, I'm selling half of this here. I'm out of the trade, took a 0.9% loss, pennies really. Out of it, left it, and I just left it to see where it goes. I am now currently down 8% on that trade, but I'm okay with it. Like I said, I just thought, get a bit of exposure there. I'm happy enough. What sunk it, I think, was this issue with China and Taiwan came out that day, kind of pulled back the Chinese stocks. So on the flip side of that there, I sold all my NEO up gains just to try and hedge my bet. So I'm kind of in the same amount. If I look at the capital, I'm invested the same amount that I was in, but I've just taken away some of the risk from via NEO. So I'm okay with the trade, but that's just how it goes. And shout out to Brendan here on Volta. Another EV player. It was doing crazy mad swing, like 15%. So we jumped in and out of that, got some trade. It's actually still holding a bit. I actually quite like it because again, I sold NEO. I'm thinking EV, as you know, that's the sector that I really want to be in. I think it's going to do well. So I've left a bit in on Volta and we'll see what comes of it. But Volta was a good trade as well. And it's very simple. You just buy when it says buy really, and you write it up and it's 20%. That's on the R chart. If you bought this on the day chart, guys, you'd wait for the confirmation, probably buy it in and around these levels, write it up 37% in 4 days. That is what you can learn in the trading course. The trading course is now on the summer sale, down to £99 only. We've actually got a lot of new members joining the Discord, and that, if you're interested in the Discord, the Patreon link's down there, $3.99 a month. Get access to all of the information, stuff that I've shown you, and there's plenty more in there as well. If you're interested, the links are down below. Have a look. That is the video. To me, the week ahead could go either way. It really could. This market is very unstable. It could go either way, no doubt about it. However, I anticipate that maybe next week we'll still see some sort of rally. Some of the big news that we talked about on Wednesday and Friday with the data could obviously swing it either way, but I just fancy it to maybe push on. We will see. We will tread carefully. I'm still staying cash heavy. Protect yourself as always. Trade safe. I'll catch you in the next video, and I will check out this video here. This is all about how to become a millionaire. If you're interested in that type of thing, I check it out because it could really massively change your life and your outlook. And until the next time, guys.